question of Bucentric Berhad acquiring ordinary share capital of Exquisite Berhad and a Miskin Berhad. But I don't really understand. Can you explain the accounting method of Bucentric Berhad with Exquisite Berhad and a Miskin Berhad?
On 1st January of 2016, Bucentric Berhad acquired ordinary shares capital of Exquisite Berhad. So this transaction will be called as acquisition method. Bucentric Berhad acquired 80% of ordinary share capital of Exquisite Berhad, which is 160 million units, will be divided over 200 million units of ordinary share capitals. And the balance of 20% of shares will be given to the non-controlling interest. When the shares is more than 50%, it makes that the Exquisite Berhad as a subsidiary, and the acquirer, which is Bucentric Berhad, has power and also control over Exquisite Berhad. The debenture also are being acquired on the 1st January of 2016 of 25%, which is 5 million ringgit will be divided over 20 million ringgit. Okay, on the 1st March 2018, Bucentric also apply acquisition method to the Amaze scheme. So it acquired, Bucentric Berhad acquired 60% of the ordinary share capital and made Amaze scheme as a subsidiary, and the balance of 40% will be for the non-controlling interest.
Okay, after we get information from Aini Sophia, I will explain about the acquisition of Exquisite Berhad. In order to know Exquisite Berhad have a bargain purchase or goodwill. For ordinary share, consideration transfer will be added with non-controlling interest, and it will give 280 million, and it will be minus with fair value of net asset that amounting to 262 million, and it will give amounting to 80 million of a goodwill. But in question, it was stated that Exquisite Berhad will be impairment loss of 10%. So it will be minus with 1,800,000. And the new goodwill that will be recognized at consolidated statement of financial position is 60,200,000. For debenture, consideration transfer will be minus with debenture held by the holding, and it will give amounting to 2 million, and it will recognize as a goodwill at consolidated statement of financial position.
Okay, I have a question. Where did you get the 5 million from the ARR of leasehold property?
Okay, for this 5 million, we'll get the information from the question, which is the leasehold property. The value at the fair value is 70 million and the current value is 12 million. So 70 million will deduct with 12 million and we will get 5 million for the ARR leasehold property. Next, we continue with the acquisition of a Miskin Berhad. For ordinary share, consideration transfer consists of two, cash and present value of payable, and it will add with non-controlling interest that amounting to 200 million, and it will give amount to 591,600,000. It will be minus with fair value of net asset that amounting to 487 million. It will give amounting to 104,600,000, and the goodwill will be recognized at consolidated statement of financial position.
In present value, how do you get the amount of 291,600,000?
Yes, we find the amount that we own, which is 60% times with 400 million, the number of unit share times with 1 ringgit 35 ringgit, which is total amount of consideration transfer payable is 624 million. In question is stated the present value every 1 ringgit of receivable is 90 cents. Therefore, the amount of payable will be times with 90 cents, and we will get 291 ringgit and 600. Next, we continue with the schedule form. first we go through non-controlling interest for a miskin Berhad and acquisite Berhad, which amounting 56,200,000 and the amount we can get from the acquisition of a goodwill. We continue with general reserve of bucetric Berhad that amounting 30 million. Acquisite Berhad of a post-acquisition will be nil. Miskin Berhad, the post-acquisition will be nil. We continue with asset revaluation reserve of bucetric Berhad will be amounting 50 million. Acquisite Berhad for the post-acquisition will be nil, while a miskin Berhad, the post-acquisition will be 30 million. The 60% for group ARR will be 18 million, while 40% for NCI will be 12 million. For retained profit of bucetric Berhad, it will be amounting 139 million and 120,000. For the impairment loss, for the group will be portion 80% and amounting 1,440,000, while for the NCI, the portion will be 20% and amounting 360,000. For acquisite Berhad, it will be 37,480,000 and 80% the portion for a group will be amounting 29,984, while 20% for the NCI will be 7,496. For the miskin Berhad, it will be amounting 29,600,000 and the 60% the portion for a group will be amounting 17,760,000, while the 40% for the NCI portion will be 11,840,000, and the total amount for the group general reserve will be amounting 30 million, while for the group ARR will be 68 million. Group retained profit will be 186,864, and for the NCI will be 286,976,000.
Okay, so this is a consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2018 for Bucentric Berhad Group. As we can see here, we get a gross profit of 689,290,000. And we will add and minus adjustment. Here I'm sorry first of all because I have made some mistake. Actually, under depreciation is only 200,000, a million, which are for leasehold. And actually this 400 is an amortization for brand. I'm sorry, I've combined it together. And then next we will proceed to profit before tax. We get 217,990,000. And after we deduct a taxation, we get 144,490,000 of profit after tax. After we add surplus on revaluation, we get total comprehensive income for the year, which are 174,490,000. Any questions?
Okay, I have a question. Why we have to multiply 10 over 12 for a miskin?
Oh, here. Okay, actually, we can see we acquire a miskin on 1st March 2018. We close on 31st December 2018. So, you have to make a timeline which are from March until December. It consists of 10 months over 12 months.
Okay, for the second question, why we deduct 350,000 in cost of sale?
Okay, for this one, it is from additional info number 3, which are profit of intra-company. Okay, actually, this profit effect to the opening inventory. We all know cost of sale consists of opening inventory, purchases and closing inventory. That's why we deduct here in cost of sale because we want to reduce the opening inventory. So just now we already get profit after tax for the group company. So now how we attribute it for parents and for NCI. Before we attribute it, first we calculate the non-controlling interest share in subsidiaries. First, okay, here we get from exclusive, the total NCI is 356 And for Amazkin, the NCI shares in Amazkin is 11,840,000. And then we add up these two and we will get the profit after tax attributable to NCI, which are 12,196,000. And then we will calculate the total comprehensive income attributable to NCI and parents. For NCI, we will add up the profit after tax just now and with surplus of revaluation for NCI. That's why we will multiply it with 40%. And here we get the NCI's total comprehensive income is 24,196,000. Okay, before we proceed to statement of changes in equity, first we have to calculate the balance brought forward of the group retained profit and NCI. Here we have two companies for group retained profit. First, View-Centric and second, Exquisite. And then we get total of group retained profit on 1st January 2018, which are 130,570,000. Okay, for the balance of NCI, we have to add up another one thing, which are amount of NCI at date of acquisition for Exquisite. Here, 56 million. We can get the amount in the previous calculation, which are the calculation of goodwill. There you can get the amount of NCI. Any questions?
Okay. As you said in the working number 2 under Exquisite, why we have to times 2 for the under depreciation leasehold?
Okay, before that, I want to ask you, when is date of acquisition of Exquisite?
1st January 2016.
Okay, good. So, we want to get the balance of retained profit on 1st January 2018. So, how many years from date of acquisition to 1 January 2018? It is consists of 2 years. So, that's why we only have to times with 2.
Okay, for the next question, why we didn't add balance brought forward for return profit for Amazkin Berhad?
Amazkin. Okay, I want to ask you again. What is the date of acquisition for Amazkin?
1st March 2018.
Okay, for these questions, I want to tell you, I am searching for balance brought forward on 1st January 2018. So, we acquired it later, 1 March 2018. So, it does not relate with the calculation of this balance brought forward. Okay, so right now I will explain about consolidated statement of changes in equity for the year ended 31st December 2018 for View-Centric Berhad Group. So here there are 6 things. First, ordinary shares, retained profit, general reserve, asset revaluation reserve, and non-controlling interest. Oh, sorry, it's just 5. Okay. Okay. These are the balance brought forward, carry forward for all the items just now that I have mentioned. We have balance carried forward of ordinary shares by 1 billion, retained profit 186,864,000, general reserve 30 million, asset revaluation reserve 68 million, non-controlling interest 286,976,000, and all this balance carried forward amount will be recorded in statement of financial position. So, any questions?
Okay, how do we get the amount of acquisition for the year in NCI?
Here, 200,000. Okay, just now Nur Atirah Ali have already explained about how that she get the amount of goodwill of Amazkin. So you guys can go back to the calculation of goodwill. There we can get the amount of non-controlling interest, which are 200 million.
Okay, so I will present to you the consolidated statement of financial position as at 31st December 2018 for View-Centric Berhad Group. Okay, as you can see, the non-current asset, the total will be 1,793,200,000. Next, the total for current asset will be 523,520,000, and it will give a total assets of 2,316,720,000. Okay, do you have any questions?
Yes, I have a question. Okay, why did you minus 3 million in bill receivable?
Oh, over here. Okay, this you can refer to additional information number 9, where the 5 million were issued and there are 2 million discounted. So it will give 3 million balance and reduce in the bills receivable. So we will reduce it in bills receivable and add it as cash in transit 3 million. Okay, so we continue with our consolidated statement of financial position with equity. So the total equity will be 1,571,840,000. Next, the total non-current liabilities will be 215 million. After that, the total of current liabilities after we add up all of this will be 529,880,000. So it will give a total liabilities and equities of 2,316,720,000. Okay, as previous discussion, in additional information number 9, after minus in bills receivable and add on bank as cash in transit, we also need to deduct the amount of 3 million under bills payables. Okay, that's all. Do you have any questions?
Okay, for debenture interest payable, where
Okay,
did you get 400,000?
Oh, the 400,000. The 400,000 is the 25% you've calculated earlier will be times with 1,600,000 and if you will get 400,000. So how do we get 1,600,000 is the interest, which is 8% of the debentures of 20 million. You times up the 8% and the 20 million and get 1,600,000. So you minus 4 with 400,000 and you will get 1,200 million. Hanis, as we can understand from the word joint control, it is about two parties or more shares control in one arrangement. Can you tell us about the definition of joint control based on MFRS 11?
Okay, in my opinion, based on MFRS 11, the type of arrangement applied in the Delta Berhad and Global Berhad is joint operations. Joint operation can be structured either through a separate entity or no separate entity. The entity also we can call as the vehicle is established. In joint operation, the venturers called as joint operators have rights to the assets and obligation of liabilities of the arrangement. In this situation, Yazer Berhad is a separate vehicle. The main feature of the arrangement is that the parties, which is the Delta and Global Berhad, have the rights to the assets and obligations for the liabilities of the arrangement. In the separate financial statements and the consolidated financial statement, Delta and Global Berhad as the joint operators will have to disclose the asset its control and liabilities it incurs together with its shares of revenue and expenses in the joint arrangement.
I've read about questions of Delta. Hanis, what do you think about what type of joint arrangement that Delta have applied and how is the accounting treatment that they treat based on MFRS 11?
For your questions, the definition of joint control based on MFRS 11 is the contractual agreed sharing of control of an arrangement, which exists only when the decisions about the relevant activities require the unanimous consent of the parties sharing control. The parties should have assessed the extent to which the parties should act together to direct the activities that significantly affect returns of the joint arrangement. And then, no single party controls the arrangement on its own, but a party to joint control can prevent the other parties from controlling the arrangement. An arrangement can be a joint arrangement even though not all of its parties have joint control of the arrangement. There could be parties that do not have joint control. For example, 3 parties have an interest in a joint arrangement. 2 of them have joint control, and another party that does not have joint control can only participate in the joint arrangement.
Oh, Hanis, from your previous explanation, you said that Yazer Berhad is a separate vehicle. If Yazer Berhad has right to its assets and obligation and of liabilities, is there any difference of its accounting treatment?
Okay, for this case, yes, there will be a difference in the accounting treatment. The arrangement will be joint venture. The parties, which is Delta and Global Berhad, should disclose its interest in Yazer Berhad as investment in the separate financial statement and measure in compliance with MFRS 139. In the consolidated financial statements, the venturer must apply equity method in accordance MFRS 128, investment in associate and joint ventures. In the question, there are an agreement between directors on the control based on the percentage they acquired. Can you explain it to us based on MFRS 10?
Referring to MFRS 10 consolidated financial statement, an investor, regardless of the nature of its involvement with an entity, the investee, shall determine whether it is apparent by assessing whether it controls the investee. An investor controls an investee when it is exposed or has right to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. Therefore, based on this question, the situation of Bumi Kenyalang, whether the investor has control or not, even though the holding interest is less than 50% equity interest in an investee, the investor may have control if the investor has all the following conditions. First, its power over the investee. Second, an investor has power over an investee when the investor has existing rights that give it the current ability to direct the relevant activities. For example, the activities that significantly affect the investee returns. Third, it has exposed or rights to variable return from its involvement in with the investee or subsidiary when the investor's return from its involvement have the potential to vary as a result of the investor's performance. And last, it has the ability to use its power over the investee to affect the amount of the investor's return.